Hi, welcome to the channel. My name is Doc Severson. I'm one of the instructors at 12-Minute Trading. And in today's video, I'd like to talk to you about the trader progression. This is a concept I read some time ago by a gentleman by the name of Bo Yoder. And I think it was one of the best descriptions of the mental journey that everybody needs to take to be able to realize success in trading. It really is a journey. It's not something where you can just bolt on a strategy and be profitable overnight with no experience. It is a very narrow path to success that you have to follow to be able to attain that success in trading. And mostly it's about learning how to think differently versus the beginning retail trader. So with that in mind, I'd like to show you this progression by Bo Yoder. What I'd like you to do is, as you go through this, as you listen to this, try to identify where you're at in this progression, and I'll see you at the end. Here is the trader progression. As you can see, it's got 6 different stages to it, and these represent the different stages that a retail trader is going to migrate through on their way up to the upper right, which is mastery. And the very first place that a trader is going to enter this progression is through mystification. This is where all of us start. This is where the neophyte trader begins. They have little or no understanding of market structure. They have no concept of the interrelationship among markets, much less between markets and the economy. Price charts are a meaningless mishmash of colored lines and squiggles that look more like a painting from the Museum of Modern Art than anything that contains information. Anyone who can make even a guess about price direction based on this tangle must be using black magic or voodoo. Again, this is the mystification stage. This is where people start. And a lot of times, this is just my comment on this, a lot of times traders that start here can become profitable right out of the gate because they don't know anything. They have not yet learned some of the bad habits that all traders tend to pick up along the way through the progression. From the mystification stage, we get to the hot pot stage. This is the second stage that new retail traders ascend to. You scan the markets every day. After a while, sometimes a good long while, you notice a particular phenomenon which pops up regularly and seems to work pretty well. You focus on this pattern. You begin to find more and more instances of it, and all of them work. Your confidence in the pattern grows, and you decide to take it the very next time it appears. You enter the trade, and almost immediately your stop is hit, and you're underwater for the total amount of your stop loss. So you back off and study this pattern further. And the very next time it appears, it works. And again, and yet again. So you decide to try again, and you take the full hit on your stop loss. Practically everyone goes through this, but few understand that this is all part of the win-lose cycle. They don't yet understand that loss is an inevitable part of any system, strategy, method, what have you. That is, there is no such thing as a 100% win approach. When they gauge the success of a particular pattern or setup, they get caught up in the win cycle. They don't wait for the lose cycle to see how long it lasts or what the win-lose pattern is. Instead, they keep touching the pot and getting burned, never understanding that it's not the pot or the pattern setup that's the problem, but a failure on their part to understand that it's the heat from the stove, which is the market, that they're paying no attention to whatsoever. So instead of trying to understand the nature of thermal transfer, the market, they avoid the pot, the pattern, moving on to another pattern or setup without bothering to find out whether or not the stove is on. That is the hot pot stage. That is the second stage that traders attain. Now, if you get through the hot pot stage, the next stage is called cynical skepticism, and this can be very, very dangerous. It's usually pretty obvious which traders are stuck in the cynical skepticism stage. You've studied so hard and put so much effort into your trading that this universal failure in the patterns only when you take them causes you to feel betrayed by the market, the books, the materials, and the gurus you tried to learn from. Everybody claims their ideas lead to profitability, but every time you take a trade, it's a loser, even though the setups all work perfectly before you played them. And since one of the most painful experiences is to fail when success looks easy, this embarrassment is transformed into anger. Anger at the gurus, anger at the vendors, anger at the writers, the seminars, the courses, the brokers, the market makers, the specialists, the manipulators. What's the point in trying to analyze and improve your own trading when there are so many dark forces out to get you? This excuse-driven blame game is a dead-end viewpoint and explains a lot of what you find on social media posts. Those who can't pull themselves out of it will eventually quit and tell everyone in the world on their way out the door that it's a rigged game that nobody can win. Now, if you're able to get past this point, if you still maintain your optimism, this is where you'll get into the squiggle trader stage. This is the fourth stage, and this is where I find most retail traders get plateaued here. If you don't quit, you'll move into the squiggle trader phase. Since you failed with patterns and so on, you figure that there's some secret weapon, a holy grail that's known to the select few. Something that will help you filter out all those bad trades. Once you find this magical key, your profits will explode and you'll achieve every dream you ever had. You begin an obsessive study of every method and every indicator that is new to you. You buy every book, attend every course, sign up for every newsletter and advisory service, register for every trading website and every chat room. You buy more elaborate software. You buy off-the-shelf systems. You spend whatever it takes to buy success. Unfortunately, you stack so much on your charts, you become paralyzed. With so many inputs, you can't make a decision, particularly since they rarely agree with each other. So you focus on those which agree with the direction of the trade you've taken, or if you're the fearful sort, you look only for those which prove to you how much of a loser you think you are. This is all characteristic of scared money. Without a genuine acceptance of the fact of loss and all the risks involved in trading, you flit around like a butterfly in search of anything or anybody who will tell you that you know what you're doing. This serves two purposes. Number one, it transfers to others the responsibility for the trade. And number two, it shakes you out of trades as your indicators begin to conflict. The MACD says the buy, the stochastic says sell. The ADX says the market is trending. The unbalanced volume says it's overbought. By the end of the day, your brain is jelly. This process can be useful if the trader learns from it what is popular, such as what other traders are doing, and if they last, how to trade traps in panic or euphoria. And even though they may decide that much of it is crap, they will, if they don't slip back into the cynical skepticism stage, have a more profound appreciation, achieved through personal experience, of what is sensible and logical and what is nonsense. They might also learn something more about the kind of trader they are, what style suits them best, learn to distinguish between what is desirable and what is practical. But the vast majority of traders never leave this stage. They spend their careers searching for the answer, and even though they may eventually achieve piddling profits, if they don't, they will, of course, eventually no longer be trading. They never become truly successful. And this has its own insidious consequences. That is the squiggle trader stage. And again, this is where I find most retail traders plateauing. They're so close to success, they just don't know it yet. To attain success in trading, you need to learn to think differently about everything when it comes to the markets. And that process starts when you get into the inwardly bound stage. This is the fifth stage of the retail trader. Few get to this point or remain here. It's much easier for humans to remain in stage 4 or lower, since those stages require you to think like you have since you have been a child. The trader who is able to pry themselves out of stage 4 uses their experiences there productively. The trader learns, as stated earlier, what styles or techniques or tactics are popular. But instead of focusing entirely on what's out there, they begin asking themselves some questions. What exactly do they want? What are they trying to accomplish? What sort of trading makes the most sense to them? Long or intermediate term trading, short-term trading, day trading, trend trading, scalping? Which is the most comfortable? What instrument, futures, stocks, ETFs, bonds, options, provides the range and volatility they require, but is not outside their risk tolerance? Did they learn anything at all about indicators in stage 4 that they might be able to use? So the trader auditions all of this in order to determine what suits them, taking all that they've learned so far and experimenting with it. They begin to incorporate the scientific method into their efforts in order management. They learn the value of curiosity, of detached interest, of persistence and perseverance, of taking bits and pieces from here and there in order to fashion a trading plan and strategy that are uniquely theirs, one which they have complete confidence because they have tested it thoroughly and know from their own experience that it is consistently profitable. They accept fully the responsibility for their trades, including the losses, which is to say that they understand that losses are inevitable and unavoidable. Rather than be thrown by them, they accept them for what they are, a part of the natural course of business. They examine them, of course, in order to determine whether or not some error was made, particularly one that can be corrected, though true trading errors are rare by this point. But if not, they simply shrug off the loss and go about their business. They understand, after all, that they are in control of their risk in the market. They don't rant about their broker or the specialist or the market maker or that vast conspiracy of everyone who's trying to cheat them out of their money. They don't attempt revenge against the market. They don't fret. They don't fume. They don't succumb to hope, fear, or greed. Impulsive, emotional trades are gone. Instead, they just trade. And that is the inwardly bound stage. This is where the worm turns for the retail trader. And if they're able to get to this stage, then it's not far before they attain mastery. This is the 6th and final stage of a retail trader's development. Even fewer ascend and remain at this stage. This stage requires very different thinking versus the rest of the retail crowd. At this level, the trader achieves an almost Zen-like trading state. Planning, analysis, research are the focus of their time and their effort. When the trading day opens, they're ready for it. They're calm, they're relaxed, they're centered. Trading becomes effortless. They're thoroughly familiar with their plan. They know exactly what they will do in any given situation, even if the doing means exiting immediately upon a completely unexpected development. They understand the inevitability of loss and accept it as a natural part of the business of trading. No one can hurt them because they're protected by their rules and their discipline. They are sensitive to and in tune with the ebb and flow of market behavior and the natural actions and reactions to it that their research has taught them will optimize their edge. They're available. They don't have to know what the market will do next because they know how they will react to anything the market does and are confident in their ability to react correctly. They understand and practice active inaction, knowing exactly what they want, exactly what they're looking for, and waiting patiently for exactly the right opportunity. If and when the opportunity presents itself, they act decisively and without hesitation. Then wait patiently again for the next opportunity. They don't convince themselves that they're right. They watch price movement and draw their conclusions. When market behavior changes, so do their tactics. They acknowledge that market movement is the ultimate truth. They don't try to outsmart or outguess it. They are, in a sense, outside themselves, acting as their own coach, asking themselves questions and explaining to themselves without rationalization what they're waiting for, what they're doing, reminding themselves of this or that, keeping themselves centered and focused, taking distractions in stride. They don't get overexcited about winning trades. They don't get depressed about losing trades. They accept that price does what it does, and the market is what it is. Their performance has nothing to do with their self-worth. It is during this stage that the intuitive sense begins to manifest itself. As infrequent as it may be, they learn to experiment with it and to build trust in it. And at the end of the day, they review their work, make whatever adjustments are necessary, if any, and begin their preparation for the following day, satisfied with themselves for having traded well. The knowledge proved through research that a particular price pattern and market behavior offers an acceptable level of predictability and risk to reward to provide a consistently profitable outcome over time. And that is the mastery stage that we should all strive to attain. So did you enjoy that? Was that fun? Did you find yourself on the progression? I'm always amazed at how people enjoy walking through the progression and saying, how did you know? You must have written the thing about me. And what I found is that everybody is pretty much the same. Not necessarily where they are in the progression, but how they progress through it. And I have never seen anybody skip a step along the way. And it's because of how the human mind operates and how we come from this sense of how risk is bad, and we have to migrate to thinking that risk is a tool. And that is really what it's all about. That if I could boil it down to one thing, it's those that have achieved inwardly bound or mastery have learned to use risk as a tool and not something to be avoided. Okay, so what do you do from here? Once you've identified where you're at, your job is now to figure out what is it going to take to get to the next level of the progression. If you're in the hot pot stage, learn how to deal with loss. You need some more skills, and probably you need to stop trading not to lose and start learning how to trade to win. If you're in the cynical skepticism stage, you need to understand that it's your job. You need to take accountability for your own actions. And part of those is learn to take the entries that feel difficult to take. Those are probably going to be the better ones that you do, instead of learning to trade what feels good. And then if you're in the squiggle trader stage, learn to simplify. What are you scared of, right? So you're delaying entries because, once again, probably dealing with scared capital and probably trading not to lose instead of learning to be aggressive and trade to win. And ultimately, I want to get you to that inwardly bound stage where things will start to really, really happen for you. If you need help with any of these, regardless of where you are in the trader progression, please contact us. This is something that we work on in our trading rooms literally every day. Thanks for listening, and we'll see you in the next video.